Hey, good morning, Ticker Tankers. Today is the Thursday, December 8th. It's 11:09 a.m. Eastern Standard Time. This is Nick Fenton talking to you, and we're looking at a one-year chart of SPY. This is a follow-up video to yesterday's trade alert. Sent the trade alert out late in the day. We had a nice, strong rally into the close. Wanted to get that trade out. Didn't expect the rally to get quite as strong as it ended up doing, but saw a little bit of a spike and wanted to, been waiting for a little bit of an uptick to put that trade out. So we put that trade out yesterday, and that was a bearish spread, the 129, 131 bear call spread on SPY. So I wanted to show you in this video why we did that. We didn't have a chance to get the video out yesterday, but as promised, following up with the video today. So here we are looking at the SPY chart. Actually, let me pull up the S&P E-mini chart. So as noted in that written analysis of that trade, we always look at the S&P futures to determine what we want to do in SPY. And for that matter, we look at the S&P futures to get a firm gauge on the overall market every day. But especially when we're trading a SPY spread, we're looking at the S&P futures. So let's take a look here. We're looking at the one-year chart of the S&P 500 index futures. And what you can see here is, first of all, we had this move from about 1150 all the way up to about 1265. And that's about a 10% move to the upside in a matter of 1, 2, 3, 4, 5, 6, 7, 8 trading days as of yesterday. And to kind of try to ignore today's action, it is working out quite nicely for us, but let's ignore that for now. So we had this move, 10% move to the upside, and what this 10% upside move did was it took us to a point of near-term resistance, as well as very close to a point of extreme resistance in our opinion. So the extreme resistance would be right here at this 1300 level, which is equivalent to about 130 in SPY. So 1300, massive resistance. You can see we had some resistance back here. Let me get the oval tool back out. So we had a little bit of resistance here and here. It broke through right there and it acted as support. Through this level it broke back down. We saw some more support here at this 1300 level. So basically, just to sum it up, there's a lot of activity around this 1300 level. It's a psychological area, but on top of that it's proven to be an area of definite response. So market responds at this level. Most recently when we got close to 1300 right here on that move on the upside on October 27th, we pretty quickly saw some downside pressure. It attempted to push back up towards that 1300 level, failed. So now we are back at moving towards this level, but from a shorter term perspective, you can see we've had quite a bit of resistance right around this 1265 price point. And I'll draw the line here, and if we zoom in, we'll just go into a 30-minute chart. You can see that line I just drew right about here. So we've got quite a bit of resistance, nothing extremely substantial. Let me go back out to the day chart. This will be a little clearer for us, and we'll just kind of zoom in. So you can see 1265, near-term resistance. So that's what we were thinking yesterday when we put this trade on. The last thing to mention is the fact that we've got, let me get back out to the daily chart. So let me delete all this resistance lines that we mentioned and focus on the fact that we are budging right up against this 200-day moving average. Now, a 200-day moving average isn't always relevant, but in this particular case, we've seen reactions to it. So we've seen support reactions to that 200-day moving average right here. It broke down through it really swiftly. We saw some nice downside momentum continuation after it eventually broke down through it. And we've seen recent resistance right at this 200-day exponential moving average. So right here, we're testing it once again. And if you ignore today's action, just focus on yesterday, we had pushed right back towards that A, near-term resistance, B, 200-day moving average resistance, and C, close to that 1300 massive resistance. So we were within a level where we could get a decent price on the 129, 131 spread. I actually ended up filling at 86 cents at about 345 if I remember correctly. But we put the order in on a limit of 75 cents, which was still fillable this morning. I'm not sure what the price is, but we'll look at that here in a second. Last thing I want to mention on this chart is if you take a look down here at the bottom, this is historical volatility. You can see our average is right around 15. So we stick around this between 10. Right here is 13, 8%. I mean, we right around 15% is the average implied volatility. Currently, we're at about 26. So we're just short of 2 times historical implied volatility level, which is a good time to be selling some out-of-the-money credit spreads, whether it's put or call. So let's go over to this screen. We're on the trade screen. We got SPY pulled up. Looking at the Jan, and let's pull up a vertical. So drop down to verticals. We chose the 129, 131. So I'm going to go here, and we're on the call side, clicking the bid on the call side, which is going to initiate a sale. And we'll change the legs to 129, 131. So you can see we're selling the 129 call, buying the 131. Okay, so now it's at 70 cents. But we filled yesterday at 86 cents. Let's go to the Analyze tab. And I'd already pulled this up on there. So based on the 86-cent fill, we're risking 114 bucks to make 86. Now we put the order in yesterday, or we sent the alert out with a 75-cent GTC limit, which easily would have filled if you would have got it in the last 30 minutes of yesterday, and easily would have filled first thing this morning. But we've seen continued downside pressure, so now it's at 70 cents. And based on that 75 cent, you can see we are risking 125 to make 75, and that gave a break even at 129.75. Let me push this to January expiration, so January 21st. Set slices to January 21st break even. So 129.75. It says 74, but it's 75, and it's showing here as 70 or 65.7. But yesterday when we put the trade on, it was about 63.5, if I remember correctly. Probability of success. Probability has moved up a little bit since the market's a bit lower than it was yesterday. We're seeing about 1.5% downside move in the S&Ps. So that's a beautiful thing. So far, so good on this trade. Again, apologies for the late trade release, but with the 75-cent GTC limit, you easily should have filled yesterday if you snuck it in, and easily should have filled in the first hour and a half, 2 hours today. But now it's looking like it's gone below that 75 cents. No harm in continuing to work it if you haven't filled, if you are just now getting the chance to put the order in. No harm in continuing to work that for another, I'd say for the remainder of the day in case you get a pop, and maybe even into tomorrow. So that explains the trade. Basically, risking 125 to make 75 and about a 63% probability of success based on some of the strong resistance at the 130 price point in SPY, and some shorter-term resistance right at the levels that we're currently trading at, and the 200-day moving average resistance, and selling a little bit out of the money because we're approximately 2 times historical volatility levels. So if you have any questions about this trade, as always, feel free to email me, nick@tickertank.com. I'm always happy to answer.